The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very good morning to you and welcome to Squawk Box Europe. I'm Juliana Tattlebaum with Carolyn Roth, and these are your headlines on this Monday morning. Japanese Prime Minister Shigeru Ishiba's ruling coalition loses its upper house majority, with gains for opposition parties pushing for tax cuts and increased spending, heaping pressure on Tokyo's public finances.
U.S. Commerce Secretary Howard Lutnick says he's confident of an EU trade deal, but reports suggest European leaders are weighing harsher retaliation if President Trump insists on raising the baseline tariff. Flying high, Ryanair net profit more than doubles in its latest quarter as Easter travel gives a lift to Europe's largest low-cost carrier.
Well, a very good morning to you. Welcome to the program. We're going to kick off with some fresh news out of BP. Now, a story broke yesterday. Sky News reporting that we could see the board of BP announce a new chairman, and that is exactly what we have. The BP announcing today that Albert Manifold will be appointed to BP as the chairman. He will join the company's board on the 1st of September. Helge Lund will step down as BP chair on October 1st. Now, we know, of course, that BP has been under a huge amount of pressure from Elliott, the activist investor. They have been floated now as a takeout target, so clearly the investment community wants to see change at the top of BP. And from a board perspective, now they are getting that with Albert Manifold taking over from Helge Lund.
So what the company is hoping for, what BP is looking for desperately, is a bit of a turning point here, given the intense pressure from the activist shareholders. The turnaround plan that was unveiled back in February, but the shares continue to trail peers because investors are not fully buying into that turnaround plan by the CEO, who vowed to drive up oil and gas production, cut investment in low carbon energy. They're also selling some $20 billion in assets by the end of 2027. But again, I think what investors have been giving BP is a very lukewarm response, and that's why, of course, and Juliana, you, Karen, and Steve, you've been covering this. There's been this takeover chatter. Shell last month, of course, also saying there's no intention of actually making an offer. So plenty of takeover chatter continuing here. Maybe there's another player who can come in. I don't know. But, of course, we did see a trading update by BP earlier this month. And oil trading was actually pretty robust. But I think, again, it's the longer term issues that are weighing on this company, which is why shares have been underperforming.
And a little bit about Albert Manifold, who will be joining as chair. He was the CEO of CRH, the Irish building materials company, from January 2014 until December 2024. So coming at this from a different perspective, not from the energy industry specifically, but of course energy key to the building industry. So this is a little bit about his background here. And again, he will be taking over shortly, October 1st, from in terms of being chair of BP. So he's coming from CRH. We are learning a little bit more about him now as we go. He is an Irish businessman, a CRH, a FTSE 100 building materials company. And in terms of CRH, the performance of that company, let's take a look at how it performed under his leadership to get a sense of his ability to lead. And this is a company that over the last 5 years is up 130%. So this has been a very successful company, CRH, and now he will be taking over as chair of BP.
All right, let's cross over to the auto sector, because a little bit of news here from Stellantis, the troubled automaker. Q2 shipments of 1.4 million units, down 6% on the year. Q2 net revenue is estimated at $74.3 billion. The first half net loss estimated at $2.3 billion. If you take a look at the North American numbers, that's where we're seeing a lot of the weakness. The shipments of 322 million units, down 25% year on year. And this has been an ongoing saga, of course, with, of course, the departure of the CEO, the early departure, and very much a leadership vacuum, you could argue. We've seen so much chopping up of the leadership within the auto industry, given the continued challenges in the U.S. Of course, the biggest market for many of them, but of course the intense competition coming from China as well.
This also follows the profit warning that we had from Renault last week, which really took the market by surprise. And when you look at the share price reaction in Renault last week, it plunged 17% after a profit warning here. Stellantis on that day also sold off in sympathy to some degree. In terms of what Stellantis is planning to do to address this weakness, Stellantis saying that early stage of actions are being taken to improve performance profitability, with new products expected to deliver larger benefits in H2 2025. Now, obviously, the difference between Stellantis and Renault is that Stellantis has a huge North America business, which is down 25% year on year, as you said, Carolyn. So in terms of North America, shipments, they are down significantly. Stellantis very much impacted by the tariff situation, and you can see the share price performance. This is a 3-year view here, but Stellantis has come under pressure. And I think, in terms of the reaction in Renault last week, we've seen just how severe a market reaction can be in these auto stocks.
And where's the bottom for auto stocks? As long as we don't know what's really happening when it comes to the U.S. tariff situation. If you take a look at Stellantis, on the year, it is down a whopping, I believe, 56%. So that's what you saw in the charts earlier.
Well, a lot of stocks to keep an eye on at the open. We're also tracking a couple of big political stories this morning. Our top story on that front, Japanese Prime Minister Shigeru Ishiba has said he won't step down despite projections his ruling coalition will lose its upper house majority. The LDP Komeito coalition now does not hold a majority in either house for the first time in nearly 70 years. Speaking at a press conference this morning, Ishiba said he accepted the harsh result, but that it was important to have consistency in critical U.S. tariff negotiations. The Japanese leader said he wanted to speak with President Trump at the earliest possible opportunity. Kerry and Joji joins us now from the country. Thank you for being with us this morning. So I guess no surprise here that the Prime Minister is set to lose the majority in the upper house, given voters have expressed dissatisfaction for some time now with his leadership. But talk us through the implications that he no longer has a majority in either house.
I mean, this is a historical moment in Japanese politics. I mean, one thing you can count on over the last 70 years is that the LDP would be around. And I think with the huge defeat that the party suffered, along with its coalition partner, it means that that is now on the rocks. As the Prime Minister himself described, the future is very rocky indeed. And that is because the coalition not only does not have a majority in the upper house, but also in the lower house. And this is unprecedented. That means that now, the electoral system is such that it doesn't immediately mean that he's going to lose his premiership, but it means that if it wants to get any kind of legislation passed, actually do anything that involves any kind of money, he is going to have to make nice with the opposition. And this is the other point about this election that it makes it very historical. The right-wing opposition parties like the Sanseitou, which is really far right, didn't exist until 5 years ago, taking a page from, say, Reform or the AfD in Germany and writing all this Japan first agenda, and other parties like the Democratic Party of the People saying that, look, we need to cut the consumption tax, forget about fiscal austerity, and try to get more money in the hands of the public. And look, at the end of the day, this was a referendum on how the government fared with rising cost of living here in Japan, particularly the price of food and rice. We've talked about this a number of times. Rice has doubled in the last year or so here in Japan. Our people were fed up with it. And you could see that in the numbers that we saw at the polls. The other thing is that this really complicates the tariff negotiations with the U.S. Now, Mr. Akazawa, who has been leading these negotiations, is now flying to Washington. This is the 8th trip that he's making. And I have to say, there has been little progress during that period. And as August 1st rolls around, soon in the next 10 days and 25% kicks in, there isn't a whole lot of room for maneuver because they didn't have a whole lot of leverage to begin with. What, if you were on the U.S. side, are you going to be thinking when you think, oh, how long is this person actually going to be our lead negotiator? So I think they're in a very, very difficult position, and it continues, of course, to potentially push the Japanese economy towards a recession because the auto sector is the backbone of the economy here.
Wow. Kaori, just want to talk to you about the market implications here. Obviously, the stock and the bond markets are closed today for a public holiday, but the yen has been trading and by and large has been shrugging off the election results. But of course, over the last couple of weeks, specifically last week, we did see the sell-off when it came to the 30-year paper with plenty of concerns around fiscal discipline. What impact would this outcome of the election have on those international investors' concerns?
I think the market did anticipate a loss, and I think that's why we saw a little bit of a triple whammy situation last week already with the spike in JGB yields, the sell-off in the yen, and the uncertainty playing out in the equity markets as well. So at the end of the day, they didn't get 50 seats that they were hoping to get, but maybe the market was pricing in a little bit worse of an expectation, or at least that's how Jesper Kohl explained it to me this morning, and perhaps that's why we're seeing a little bit of an unwind in those positions in the dollar yen. But at the end of the day, I think people are going to be focused on whether or not the Japanese government can stick to fiscal austerity. If there is such a huge call for, say, the consumption tax to be cut, to pump more money into the system, how is that going to continue to play out? And that does pose a risk for a country like Japan with a huge debt to GDP ratio, not to mention complicate the task ahead for the Bank of Japan, which is looking at inflation well above the 2% target for a long time now.
Kaori, thank you so much for breaking it down and keeping us up to date throughout the run-up to this vote. I really appreciate you joining us, Kaori and Joji. Let's continue the conversation with Jesper Kohl, head of Japan at Monex Group. Jesper, thanks for being with us. So we just got, a briefing from our reporter over in Tokyo about the election. The PM so far pledging to stay on despite no longer having a majority, it seems to be the case in either house. How sustainable is it for him to continue governing without control of either the lower or the upper house?
Look, right now, nobody wants his job because the LDP has no majority in the lower house, no majority in the upper house. And, quite frankly, it's one thing to say Mr. Ishiba should resign because he lost the election. But anybody who is a little bit Machiavellian is, I want to be in power. I want to be the prime minister, not just replacing Ishiba. And right now, there's so many complications in the coalition discussions that it's really better him than me. I think that, that's the calm before the storm. Sometime this autumn, when the budget negotiations in October, November get real, that's when the knives are going to come out against Mr. Ishiba.
So what happens come the autumn if that really is going to be the next flashpoint and he's sort of a sitting duck until then?
I think it's very straightforward. I think that the calls for greater reforms, for actual supply side measures that bring inflation down. Because yesterday's polls, the Japanese people are angry at one thing. Predominantly, this is because, if you're a pensioner, your purchasing power has fallen by about 30% over the last couple of years. Inflation is running for 39 consecutive months, well above the 2% inflation target. That's what needs to be tackled. And that's ultimately the key focus on how the LDP or really any prime minister is going to get the support of the people back.
Jesper, this is Carolyn here in the London studio. When it comes to international investors, they've very much been concerned about the fiscal discipline, as we just discussed with Kaori. Now, of course, one of the points of contention has been the sales tax, the lowering of that. Will Ishiba, will he have to concede ground here, and how will it be viewed by international investors?
I think that the elite bureaucrats, which unlike Europe, unlike the United States, as you know, in Japan, the elite bureaucrats really run the country. And I think that they will fend off these populist demands to cut the consumption tax or to increase spending even further. So I think that for global investors, you're right. The concern is obviously there, particularly because inflation continues to accelerate, putting upward pressure on bonds. But the really exciting thing doesn't change, which is that the corporate metabolism in Japan is on fire. We've got record mergers and acquisitions, record management buyouts, record IPOs, record business investment expenditure. That's the sort of stuff that fuels global interest in the Japanese equity markets, and that doesn't go away because of Ishiba being a lame duck.
So that means once the Nikkei starts trading tomorrow, you would buy, or you would tell investors to buy into any dip just because you're so seemingly very much excited about the prospects of the equity markets.
No, absolutely. And I think that the Japanese equity market is a buy on dip. I think that the big prosperous sector is the Japanese banks and the Japanese financials, as well as the consolidation games, that you're seeing in the capital goods, in the machinery and machine tool businesses. I would stay away from anything global because obviously after yesterday's election, the hands of Team Trump, President Trump's negotiation power vis-a-vis the Japanese Prime Minister has just increased tremendously. So for all intents and purposes, the tariffs are going to be harsh.
What does that all mean for the Bank of Japan if we're now looking at a scenario where the U.S. has the upper hand in trade negotiations?
Look, I think that Governor Ueda is stuck. He promised to be careful and cautious. Now that particularly pressure on the Federal Reserve to cut interest rates, to possibly even replace the chairman, now that that sort of pressure is rising, I think, unfortunately, in my personal opinion, I think the Bank of Japan is behind the curve. They're way behind on the inflation side. Are they going to do anything about it? The answer is no.
All right, Jesper, thank you so much for that. Appreciate your analysis this morning. Jesper Cole, head of Japan at Monex Group. Now, President Trump denied a report suggesting that the U.S. Treasury Secretary Scott Bessent talked him out of firing Fed Chair Jerome Powell. It comes after the Wall Street Journal reported that Bessent persuaded Trump to not make the move, arguing that the Federal Reserve was set to cut interest rates this year. Writing on Truth Social, Trump called the report, quote, typically untruthful. Now, our U.S. colleagues will be speaking to Scott Bessent later on today. Tune into that interview at 12:30 BST. And still coming up on this show, trade tensions in focus as the EU looks to agree a deal with the U.S. ahead of next week's tariff deadline. Plus, another major earnings week as Europe's lenders take center stage. We'll have more on what to expect. And Bank of America says quantum computing could be the biggest revolution for humanity since the discovery of fire. We'll speak to the head of Global Thematic Research, Haim Israel, at 7:30 London time. Do stick around.
Welcome back to the program. Let's get you a check on U.S. markets and where things closed up on Friday. It was ultimately a muted session overall. The S&P 500 hitting another all-time high intraday. The tech-heavy NASDAQ hitting another fresh record close. The NASDAQ just moving from strength to strength. Over the course of the week, the NASDAQ climbed a further 1.5%. That was the fourth weekly gain in the last 5. So tech very much back in vogue. In terms of the Asian trade, we are tracking the reaction to the Japanese election result. Japan itself, equity and bond markets closed for a holiday today. We did see a reaction in the yen, though. The yen rising about 0.7% initially on the back of the results rolling in, but then paring back gains. In terms of trade elsewhere in the region, the Hang Seng up about 0.5%. The Kospi over in Korea 0.7% higher. Over in Australia, you've got the main index bucking the trend and down about 1%. As far as European trade goes, here's an indication of how the market's poised to open in just about 40 minutes' time. We're looking at a modest pullback here as Xetra DAX looking to drop about 0.25%. A few things to factor in here from a single stock perspective. Ryanair results, BP announcing a new chairman, and then a profit warning from Stellantis just in the last 20 minutes.
All right, trade talks between the U.S. and the EU continue to keep markets and investors on edge ahead of next week's August 1st deadline. Let's get into the latest. U.S. Commerce Secretary Howard Lutnick says August 1st is a hard deadline for tariffs coming into effect, even if negotiations continue past that date. Speaking to CBS, Lutnick dismissed the threat of some EU countermeasures, saying, quote, they're just not going to do that. But he sounded an upbeat note on the state of talks, saying he is confident the U.S. and EU will agree on a deal. Meantime, President Trump is reportedly pushing for a minimum tariff of 15 to 20% on EU imports in any deal with the bloc. That's according to the Financial Times, which says Trump is happy to keep duties on the auto sector at 25%, and that European Trade Commissioner Maros Sefcovic gave ambassadors a downbeat assessment of U.S. talks on Friday. Now, one EU official told CNBC there's been a clear shift in the mood on the bloc's response among all EU member states except Hungary. The Wall Street Journal and Bloomberg have reported that an increasing number of members have signaled their support for the EU deploying its anti-coercion instrument, the bloc's most powerful trade tool, which would give the Commission broad powers to take retaliatory action against the U.S. Now, the EU is continuing to prepare countermeasures in case a deal is not agreed with the U.S. Previously proposed duties on 21 billion euros of imports, including agricultural products, jeans and motorcycles, are due to go into effect on August the 6th. The Commission has also prepared tariffs on an additional 72 billion euros of items targeting industrial products, including Boeing aircraft and bourbon whiskey, and is said to be considering a third round of levies, which would include digital services. Now, Sylvia has joined us around the desk. You've been talking to your sources in Brussels. What do they tell you?
The mood has changed, and it's interesting because in the past we would see American negotiators a little bit more negative when it comes to the conversations with the Europeans. Now things have changed, and we actually have the European Union sounding a lot more downbeat when it comes to a potential outcome of trade negotiations with the United States. In fact, one European official told me over the weekend, we have no illusions anymore. And I understand that, sometimes European jargon is hard to understand, but we have to discuss this anti-coercion tool because it is a very important tool that the EU has. They developed this actually, in fact, to deal with trade matters against China. But they're now considering using this against the United States. And one thing that changed over the weekend was actually that now Germany is the country openly talking about potentially using this tool. And Germany is perhaps the keenest of all the member states to have a trade compromise with the Americans. So that just really tells you of where we are in these trade conversations with the US. But ultimately, I wouldn't rule out the possibility of a deal. Because usually when we are following conversations, between two countries or two blocs, there's always at one point where things seem to go a little bit more negative, and then at the end of the day, there's always a resolution. So for the time being, I wouldn't exclude that possibility. But the reality on the ground is that the Europeans are a little bit more downbeat, and they are preparing for any eventuality.
How relevant is the August 1st deadline to the EU-US talks? Over the weekend, we heard Howard Lutnick say that from August 1st, yes, we can continue trade conversations after this deadline, but that's when you have to start paying. And for Europe, that means 30% tariffs.
Yeah, which would be huge. And as the Commissioner has highlighted, this would actually bring trade to some extent to a standstill between both blocs. The ultimate problem with the deadlines is that they have shifted in the past. And so even in Brussels, they are not really sure whether that is actually a final deadline, even though we had that comment from Lutnick at the end of over the weekend, I would suggest. However, it's also worth keeping in mind what the EU is still trying to achieve in the conversations. And one of my sources explained to me that despite that report from the FT suggesting that President Trump was looking at tariffs of 15 to 20%, Brussels is still pushing for a 10% baseline rate, with carve-outs, of course, but they're still pushing for that level, which would be the same as the UK. So it remains to be seen not just whether we're going to get a deal, but ultimately what sort of detail we're going to get.
Can we go back to the nuclear option, though, the anti-coercion instrument? What would that entail? I mean, you always read about the tax on big tech. What else would it entail? And where would it hurt the most? Is it big tech?
It could be big tech, and it would likely be big tech because they would have that option, which the reality of this tool is that allows the European Commission to more easily target the US economy. And they can choose that based on where it would hurt the most. And it is in digital services. It is big tech that could be hurt the most if indeed they decide to use this tool. It does sound like an extreme step from a European perspective, but the fact that they're discussing it openly, and it is coming from Germany, it is very meaningful at this stage.
You talk about how Germany has sort of shifted its stance on the anti-coercion instrument. We know Germany has been pushing for carve-outs for the German auto industry, and that seems to be one of the sticking points here, that President Trump, according to reports, doesn't want to give in and give any leeway here.
It's so fascinating because actually just before that July 9th deadline, we were very close to a deal. The Europeans were expecting that they could be announcing a deal very shortly. Ultimately, President Trump was not happy with the deal, and he decided we're not going to do this, and hence why we still have these conversations going on. So ultimately, and Brussels is very aware of that, whatever is on the table, it needs to be accepted by the president, or else there's no compromises whatsoever. And that also involves his opinion when it comes to the auto sector. He doesn't want to really change that, and he actually wants Europeans to buy more American cars as well. So again, at this stage, I'm afraid it still remains to be seen, and detail is still lacking.
Is it safe to assume that no one in Brussels is going on holiday anytime soon until this is sorted out? Because that's what usually happens in Brussels of the summer. It's like tumbleweeds. It's empty, right?
You're touching a very sensitive point.
I know.
People want to take their August holiday.
They do.
So they have 2 weeks. Let's see what's going to happen.
This is tricky. Now, U.S. tariffs, of course, could have a dramatic effect on European firms relying on exports to the country. For more on the industries which could be hit hardest, check out CNBC.com.
Let's take a look at European futures. Just over 30 minutes away from the market open here. And we're looking at a modest downturn. The Central DAX looking to lose about 20 basis points at this early hour. FTSE MIB about 17 bips. FTSE 100 looking to hold up a little bit better, but still looking to open in the red. We'll be right back.